What are your takeaways, Chamath, from what happened at Facebook when you look at it and the pressure that was put on the ripping of the stock, even though they're down 2% year over year in terms of advertising revenue?
There's a guy on my team sent me this chart. He did a pretty detailed technical analysis of Facebook. Nick, can you please put that image up there? So basically, this shows
This is really technical.
This is the first time Facebook mentioned the word metaverse. In Q2 of 21, on the earnings call, they mentioned it 20 times. Yeah. And the gray line here is the stock price. So as they kept mentioning it, the stock price just reacted as it did. But Q4 of 22 was the first time that the word efficiency exceeded the word metaverse, and you saw the stock price rip up. So what's happened at Facebook is really interesting because I think it transitioned to what's generally called an X-growth company, which means that people are now looking at a business that has essentially gotten to its peak size, and now what they're looking at is its ability to generate cash flow. The cash flow generation or cash flow yield of the business was like 3.5%. But they're making enormous cuts, both in CapEx as well as headcount over time. They're getting their expenses under control. And all of that should drive up their free cash flow yield. And so I think why people got very excited is there are very few X-growth stocks that you can own that can just compound and crunch ginormous amounts of money. And these guys are in an incredible position to do it, more than $100+ billion of revenue. And if you get these costs under control and get efficient, get the employee base down to 30 or 40,000 over time, this is a thing that just spits out just ginormous amounts of cash. And so it's
back
really
to value investing and Warren Buffett, that means the earnings per share go way up.
Yeah, like the Facebook PE is quite modest, actually. Now, I actually put back in stock-based comp, and its PE is about 11.
So still reasonable.
If you go back to the Ben Graham analysis, this is a company that perfectly meets that criteria of you can buy it at a PE that's basically 2 times the risk-free rate. And so I think it's an incredible stock now that you can own. Because if they keep grinding out all of these kind of free cash flow gains, man, they'll just have enormous amounts of money. They already announced a $40 billion buyback. The thing to keep in mind is Apple had a moment like this. And when Apple went X-growth, they did the brilliant thing, which is they said, we're going to borrow heavily and we're going to return cash. I may have posted this in the group chat to you guys. By 2025, Apple will have exceeded $1 trillion of cash distributions. I mean, that is just nuts.
Does that include buybacks in cash distributions?
Buybacks and dividends. And so Facebook now, you can credibly see a path where Facebook could chunk out hundreds of billions of dollars of total shareholder value returned over the next 4 or 5 years. And so, for value investors, it's somewhat of a kind of a no-brainer. I mean, nothing's a no-brainer, but
yeah,
really, really attractive value fundamentals right now.
Well, I mean, you did see Warren Buffett buying Apple. I think it's his largest position. You're going to see him probably do the same with Facebook.